It's Trading Tip Tuesday for Brave New Coin. Let's take a look at the one indicator to rule them all, the Ichimoku Cloud. I'm using 2061-2030 as my settings. I don't care what you use. I'm just telling you this is what I use for the video in case yours looks different than mine. I've used this since 2013. It's back tested. Again, I'm not going to explain why I used this, but keep in mind this is what I use and this is why it looks different from maybe yours. So we have been bullish on the cloud since October. Recently, as of yesterday, we had a bearish TK cross above the cloud. What does that mean? So if you've never seen the cloud before, how this works is if price is above the cloud, we're bullish. If the cloud is green, we are bullish. If we have a fast over slow signal, we are bullish. And therefore, collectively, it's a series of checks and balances telling you, okay, you have permission based on this indicator to go long, to open a trade that says, I think price is going higher. Price will be higher tomorrow than it is today. Price will continually be higher. We call this a trend. It's a bull trend. And how this works is if it remains bullish, then it holds above all of those levels. Throughout the trend, we retest this red line, the Kijun, several times. That is a re-entry signal, a mean reversion type of price action move. And then eventually those bounces fail. Should you get nervous about adding to a long at any of these levels? No. Should you get nervous about going long at any TK recross above the cloud? No. Should you get nervous about going long on any Kumo breakout above the cloud? No. If all the checks and balances are there that tell you to go long, on balance, the trades that work out like this is a multi-month bull trend. The trades that work out like this will far pay for the trades that do not work out, the trades that are a mess, the trades that stop you out very quickly, right? That's the point of any indicator that's worth its salt will tell you something about trend, typically. So where are we now? We are in a giant mess, a bramble wood mess of a chicken wire fence. That's basically how I'd describe this at a high technical level. Now, if we turn off the price, because it just helps me, it eases my anxiety, we, again, are experiencing a bearish TK cross above the cloud. What does that mean? Well, that means if you were long since October, if you opened a long down here, like a good cloud trader, you're closing that long here like a good cloud trader. Again, you have to have the confidence in the backtesting, in the signal. There's a reason I use these settings, because the signal is so high relative to the noise that I'm confident that, okay, that's it. We are more neutral than bullish now. We're certainly on the bullish side of neutral because we're above the cloud. But if this sells off, I say to myself, I should have known better because this told me to close my long. That's another way to think about this. If something tells you to close your long, why are you ignoring it, right? Okay, so just think of it like that. And these TK crosses happen all the time, relatively kind of once every 30 days. And in best case scenario, once every quarter, we get signals like this. They can happen at a variety of places relative to the cloud. They can happen in the cloud, above or below the cloud. And if you're getting a congruent signal, as in a signal that matches the trend, that is an extremely probable signal for trend continuation. So here, for instance, we're getting this crisscross with price below the cloud. That is a strong likelihood of trend continuation, bearish continuation in this case. Again, what you want to see, obviously, is just this. We go along here, we close it. That's it, right? Like that's the easiest thing to do versus any other mess. Here's an example of the long side of that trade. Now, it doesn't matter where price goes. That's probably the hardest thing to think about. It really doesn't matter because you're just following the signals, right? It's telling you, okay, you have permission to go long here, close that long, re-long here, close that long. So as far as the cloud decision tree is concerned, right now what you're waiting for is this bullish TK recross above the cloud to re-long. Typically these happen between 11 and 30 days. So between 11 and 30 days from yesterday is when we will probably see the first likelihood of a bullish TK cross if we see one. Again, this is an if this then that, not a I think this is going to go up or down. This is what we prepare for and look for if you're trading this indicator. And what did that look like in 2017? I talk about this a lot because we saw a lot of them, and it's not typical, it's not usual what you see. But if you are bullish and you are looking for longs in the next 11 to 30 days, you are looking for a bullish TK recross above the cloud. That's all you're looking for. It's pretty simple. You want everything else to be on your side. You want price above cloud, cloud to hold green. If it doesn't, you want cloud to reflip bullish, that sort of thing. But this was 2017, and yes, you could have held the entire way up and would have been fine. Obviously, hold on, do your thing. But if you're trading this based on cloud, it's telling you when to stop, when to go again. You know, if you're driving your car, this is the red light, green light, red light, green light, red light, green light, red light, green light. So again, it's telling you, hey, trader, close your long, reopen, close, reopen, close, reopen, close, reopen. So if we are bullish in the next 11 to 30 days, this is what you want to look for. This exact type of signal. Again, price doesn't really matter. Price can do whatever it wants, but if you trust the signals, that's what you're looking for. The issue now we have is we are in between two decision points. There's a fork in the road. We are either going to see this bullish TK recross above the cloud, or we're going to see this edge-to-edge trade, which I'll explain now. The reasons we are maybe more likely to see an edge-to-edge trade at this point is because we've had not one failed continuation pattern, bullish continuation pattern, but we have a potentially failed bullish reversal pattern now with this head and shoulders not actually reaching its target. It did break out, but this was probably one of the more troublesome signs that we're probably going to cool off a little bit. This was in an ascending triangle that didn't break up. It was a Bollinger Band breakout that didn't break up. So it appears as though bears could be in control here. So what do we look for? If we think there's a reversal trade setup, what do we look for? I call these edge-to-edge trades. They're referred to as E to E, whatever you want to think of them as. And the idea is if we close a candle inside of the cloud with a bearish TK cross, so we have the bearish TK cross, we're halfway there. The moment we get a candle close inside of the cloud, that is your entry signal. Boom, you're short. Not investment advice. That's how I'll be trading it. Open your short here, and the target is the opposite edge of the cloud here. In some cases, this will have other TA backing it up. This is the 200-day moving average, which conveniently is also near the other edge of the cloud and would represent a full mean reversion for the first time since October to the 200-day moving average. So there's some other TA on your side here. And your stop loss after the entry would be a break above the Kijun. So the Kijun is going to move down slightly, but that is the point at which you can say, okay, the short momentum, the bearish momentum isn't there. So it's probably a good idea to close this short. We're not even there to the entry yet, so keep that in mind. And the other thing to keep in mind is, can you get chopped up in all of this? Of course you can. Look how insanely all over the place we've been over the past couple days, right? The point isn't asking yourself, can I get chopped up? Will I get chopped up? What is the likelihood of getting chopped up? If you trust in the signals, again, it doesn't matter, right? You just say, okay, I love Bitcoin, but the short is juicy. It is a decently sized short percentage-wise. It is a decently sized risk-reward return. I don't know what percentage this is. Doesn't really matter. It is what it is. There's a very clear setup here that's decent and worth taking. And if you want to look at backtesting, here are my examples. Bitcoin daily 2011. Okay, you can pick any chart at any time frame. I like to stick to the daily. I like a lot of data to look at. High data capture is how I refer to that. You have your bull trend. Bearish TK cross tells you, trader, it's been a good run for the bulls. Time to close. If you're looking for longs, you're waiting for that bullish TK recross above the cloud. You do not get that. Instead, you get this bearish Kumo breakout. And this entirety is reminiscent of what? 2017, 2018 as well. You'll see these fractals, these cloud fractals over and over again once you know what you're looking for. So then the trend says, okay, it's bearish up until we get this bullish TK cross below the cloud. So it says, look for shorts. You're short. Close your short. Once we get into the cloud, that's your go long signal. Target other edge of the cloud. It might go to infinity past that, but that's not the trade that I look for. I look for this trade here. Boom, boom. Just as exactly I'll be looking at it here. This might go to zero beyond 39K. I don't care. This is the short trade setup that I'm taking. Here's another one on the weekly. Very similar. Bull trend tells you to, okay, trader, it's time. You get out short when we're below the cloud. Hold your short. Close your short here, and then that's a reversal trade at that point. Let's look at another one. ETH. Hey, that looks familiar, right? Bull trend, bearish TK cross, the first one in several months, in this case, in 2018. And we get a crisscross thing here. It says close your short, reopen your short. It's not always perfect, right? Keep that in mind. And the point again is these signals happen infrequently enough that you can have a high conviction in them, and the high conviction, high reward pays off for stuff that doesn't end up working out, right? So you get this short close, short re-entry, then price eventually breaks into the cloud with a bullish TK cross, and you get your edge to edge move on the weekly from 200 to 760, whatever it was, and eventually it goes beyond that, right? That's not the expectation. This is definitely an outlier when you're looking at these edge to edge trades, but it's always a possibility, right? So it's always a possibility that we break 39K on the BTC edge to edge, but that isn't the expectation. Here's ETH-BTC on the weekly, same story. You get a bearish TK cross all the way in late 2017, and it doesn't finally cross bullish again until July 2020. And so all this makes sense that it's a reversal trade. Now, it's not always to the other edge of the cloud, right? Immediately, but it'll eventually hit some edge of the cloud. That's the expectation. And we're way above that now for ETH-BTC. Here's an active potential edge to edge in the making on LTC-BTC. We don't yet have that bullish TK cross to support this edge to edge move, but this is one of those that I'd be highly interested in watching it develop, right? Because you had your bearish TK cross all the way up here for a year plus at this point, and we're finally getting that bull cross signal again with a massive edge to edge move. Now, do I think LTC's fundamentally better than BTC? Do I think LTC's existence makes sense? No, I don't. Okay, but I don't care, right? We're trading the signals, we're trading the chart, we're trading the cloud, and you can see how violent this stuff moves on alts on these BTC pairs, right? So this is one to watch for sure. Here's a BTC USD. This was 2019. Again, this outperforms the edge to edge move greatly, but again, this is the bear trend. Here's your edge to edge, and it leads to continuation, can lead to continuation. So I would watch for the edge to edge move here, because that will fail or trigger before the bullish TK recross above the cloud. Something else you can watch if you are looking for that short trade setup is daily fractals, Williams fractals. How this works: if you get a low, high, low, you get a green fractal. If you get a high, low, high, you get a bear fractal or down fractal. And if you are breaking down fractals in a bull trend, that is a stop loss signal. It acts as a trailing stop loss signal. If you are breaking bull fractals, breaking above them in a bull trend, that is a add to your long signal or go long signal. So in this case, if we are breaking bear fractals with the expectation of this edge to edge move, that is your go short signal. That is your permission to open that short. At least that's how I will be looking at it. And again, here, this was your stop out signal if you were still long, not necessarily a short entry signal because we were still bullish. Here, we will be inside of the cloud for only the second time since October, and you'll have the bearish TK cross on your side. So hopefully this all makes sense. And kind of the last thing to mention, on lower time frames, when you're short, or if you get short, or when I'm short, whatever it is, if that triggers, then I would be watching stuff like the 4 hour for signs that the short isn't going to work out. Now, typically, these edge to edge moves do work out, pretty high conviction plays, but if I'm concerned with the short side, I'd be watching this 4 hour, which is currently a mix of bull and bear. It's not quite one or the other. If I'm bullish, I'm waiting on bullish cloud, price back above the cloud again. If I'm bearish, I want this cloud to stay red, and I want price below cloud with a bearish TK cross. It is likely that this 4 hour aligns with the daily candle close inside of the cloud. So hopefully this helps explain the decision tree for the cloud stuff, even though the daily chart looks like a mess right now. This is the stuff I'm watching highly closely, because if we get a bullish TK recross above the cloud, that is a margin long for me 25 times out of 10. If we get a edge to edge short signal with that bearish TK cross, that is a high conviction margin short for me. So this is exactly what I wait for when I'm looking for positions. That's all for this one. Like, dislike, comment, share, subscribe, and you can check out how I will be trading this on the ETH-BTC portfolio in Enzyme.finance. I have the ability to short this with synth BTC, so I can long the inverse, basically is how that works, of BTC. And I will be doing that if we hit those levels, we trigger those short trades. So keep that in mind as if you're looking for, rationale and reasoning as to why I'm doing what I'm doing. And the holistic part of this if you look at the other stuff, the on-chain stuff is weakening. We're getting a 1050 bear cross. We're getting weakening in daily oscillators. So there's other reasoning and rationale. But as far as my conviction in the short side of this, it is highly dependent on that short edge-to-edge entry signal. And we also have a managed DeFi portfolio with 15 to 20 DeFi coins. You can check that out as well. There will be links for both of these in the video description below. Happy trading.